All right, you got him. Here he is. Quasar Markets Live. Got you, Todd Horowitz. Bubba's. He's well known. Bubba Trading. How are you, Bubba?
Big beat. I'm doing great. I'm watching a crazy market right now, and it's wacko. That's all I can really say.
Yeah, no, you're totally right. One thing we talked about, and I just got back from New York as well. It's all over New York as well. The three themes I think that are being popular right now. Obviously, they're still talking about Mamdani, but the K economy. And you've also talked about the K economy, that it's not working for everybody. What are your thoughts? Everybody here knows what my thoughts are. What are your thoughts on this?
I mean, well, the K-shaped economy doesn't work for 80% of the people or more. Okay, the bottom end of the K, which is a much bigger part when you draw a K in school. The bottom side is much bigger, and that's the people that are struggling. The upper class always does well. They always flourish unless they're somewhat over leveraged. But for the ones that have intelligence always flourish in times like this, because the bottom end of the K is getting slaughtered. Look at all the jobs that we're losing right now, Steve. 48,000 jobs layoff at UPS right before Christmas. Amazon laying off people right before Christmas, and they're talking about in the next 5 years laying off 500,000 people. Where are those people going to go to make a living? So you have an economy that is not reality, and we're seeing that too many people. There's too many poor people. Too many people can't live. And if you live in cities like New York, Chicago, or California, if you're not making $150,000 a year, you're living in poverty. Right. And considering the average income is $70,000, that's not a very good sign. I mean, costs are rising. People are spending way too much of their money on things that are not joyful things, but groceries and things like that, which makes it a much tougher wheel, which is why we don't see a lot of market participation. Markets are higher, but look at the volume. That's the key trick, is always the volume. The lack of volume tells you that the average investor, they can't even put in their 401ks anymore because they can't afford to live.
Right. And you talk about it from the perspective of the Trump saying that he's going to give everybody $2,000 if you make under $100,000 a year. He really is talking to those people that were downtrodden, right?
Yeah, listen, Steve, or Big Beat, really, it's not Steve, it's Big Beat. You know, we're looking at the real possibility of universal basic income in this country. Okay?
Yeah, we are.
Because you've eliminated and are eliminating so many jobs, and guys my age, you know, let's say 45 to 65 or older that are still working, they can't adjust to the AI technology. They're not trained in that. This is not the industrial revolution where you could train anybody to operate on a line. This is something that most of the population doesn't even comprehend. So these jobs are going to be gone. So what are you going to do with those people? Put them on welfare, or are you going to put a universal basic income? And that's the real problem, that the government has to step up here now and eliminate all the waste from the welfare programs and the SNAP program, because we know how much money is stolen from those programs. I mean, so we have to, if they're going to do something, and it's a very real possibility, because you are eliminating too many jobs for too many people, and somehow they're going to have to eat and live.
Yeah, and that was a question mark that was brought in the previous New York mayoral race before this one with Eric Adams. That universal basic income, UBI is what are known as, could there be real possibility there, in possibly like New York and Chicago, like you just said. Look, I was just in New York, and the lines at the churches were way long. They're wrapped around the edges of streets, corners, and it's a problem. But yet the Dow, and I've already said, we're going to hit 50,000. We're going to keep pushing higher. What is it? Where's this disconnect? Why are people buying more stock when there really isn't the numbers, the fundamentals to back it?
Well, this is when you end up, this is signaling. Now, you and I talked a few weeks ago about liquidating some of your positions and seeing that we might be running some problems here. And I think, look, I go back to 1980 when I started as a floor trader. In the 90s, we had the same type of market action. Everybody says that this time is different. It's not different. You get markets and stocks that are so overvalued that they'll never make enough money to cover. And eventually, they're going to have to pay the piper. And you see guys like Warren Buffett that have started to liquidate a lot of stuff. Because why? Because he knows that if he's got his powder dry and plenty of cash, when this meltdown does come, and when the economy and the bad things that are going on start to affect the upper end of the K, which they will, you will start to see a market meltdown. Now, again, market meltdowns are opportunities. They're not something to be distressed about, but you need to have cash and ready to go. And I think that's what you're watching with many of these big investors that are stables in the market, that they're getting ready to be buyers when this market finally starts to fall apart, because the valuations cannot be sustained. The markets cannot be sustained at these levels, but we're not going to pick the top. We're going to liquidate some stuff out and be prepared. But again, with the opportunity of getting back in if something changes, but you know that PE ratios at 300 to 1, they don't work. Okay.
Right. And that's a good question there, Todd. I mean, when you look at it from that perspective and you say, okay, we know the economy is not working for everybody. We know that AI is over leveraged and overbought, and we saw some pullback, and yay. And I even bought back in last week and sold of this again, on Monday. How do we know where the bottom's in? I don't like picking tops and bottoms. That gets you in trouble. But how do you know what the capitulation actually happened?
I think it's really pretty obvious once it happens, and again, it gets really crazy. The panic gets really out of whack, and of course the volatility, the VIX gets crazy, and we're nowhere near there, nor have we been near there at any time recently. And I can't say we're going to be there anytime soon. I just say that the odds predict that we should see a pretty nasty sell-off. Now, one of the big things is that the reason we get these bottoms when they finally do come in is because everybody's panicking. And when everybody's panicking because they're talking about it. It's in the headlines. People are puking out their portfolios. They're getting rid of everything. They're selling at wholesale prices. And I think that's what you look for. And the one thing that we have to remember as investors, not traders, but as investors, once the market starts to, even if you think it's capitulating, it's not. If you have your powder dry and you have money to invest, then you can always buy and average yourself in. You don't have to buy it all at once. You don't have to over leverage yourself to get into the market. Let the markets trade. Don't try to pick the bottom. Don't try to pick the top. Pick your spot of where you're comfortable and where mentally you won't be upset or losing sleep if that stock you buy, once it does go down, goes down a little bit further.
Yeah, and I always go with the old adage of my cab driver is asking me about the stock market, which I saw a lot of that happening over the weekend. I was at a hotel that just would not stop asking me about the markets. Crypto was a big talk over the week. That bothers me, right? Are we at top? Are we at top? When people say that they're in a top, then I know that we're not. If people start saying they're very, very excited about the markets, then I go, ooh, that's different, right? And I usually point at them and go, okay, got it. Thanks. I know what to do, right? Because I don't always understand the psychology, especially in this market, right? Where you're looking at AI as the driver. It's rare. It's a rare market when one theme or thesis drives the whole market against the grain of what really should happen. In this case, AI driving the markets up, the rest of the economy. It's all holding up the stock market. But when I see Microsoft and I see Anthropic talk about how much money they're going to put into this, that kind of scares me that they're investing. So when I see all of these factors, and let's just take one more, the government shutdown might be ending over the next couple of days. We have to go back to normal headlines of war and Ukraine and China and Taiwan again, and yet AI is still holding it all up. So is this a case of a one-hit wonder thing, or are we looking for something else?
Well, I mean, this is a house of cards when you really look at it. I mean, you're not old enough to remember the 90s, but the internet bubble, which this is very similar.
Oh, yes, I am. I was there in the markets. I do. Well,
I'm complimenting because how good you look. But
thanks for that.
At the end of the day, this was the same story in the 90s. The internet stocks, the .com stocks held up the markets. They continued to push them and they continued to push them. And very true and very clear story is my partner and I, we were massively short throughout that. And we had to make a decision. Do we want to take our chances and stay short or get out and continue to trade? Well, we turned out to be right, but we had to take our losses because, again, nobody can tell you when the top is going to be in the market. You have to be willing to, if you think this is the top, you have to be willing either to cover your shorts if you short the market or rebuy back your longs. But at the end of the day, okay, you can't afford to always be out and trying to predict markets. People don't predict markets. Markets do what they do, and the bottom line is they go up 8.5% year over year since the history of markets, okay? So as long as America is going to be strong, which I have no reason to believe we're not, then when the next crash comes, we're going to be looking to be buyers. But unfortunately, most of the average investors will be looking to be selling because they don't comprehend and they can't take the panic and they can't take the fear.
Okay, so the big money is institutional. What's institutional thinking right now?
Well, I don't think they're really playing that much right now, Steve.
I agree.
Okay. I think they're more on the side. I think they're more waiting to sell. Okay. You look at the average daily volumes we have right now.
Yep.
They've been pathetic for a couple of years, but they're less than pathetic right now. They're half of what was bad, what I thought was bad before. So when you don't see any volume, you know that the big institutional players are not playing. Basically, the money that's going into the market today is pension funds, 401k money, IRA money, whatever. And that is always predisposed to go higher. That's why the markets go up every year, because there's always buyers no matter what's going on because of these pension funds and other things. Okay. So I think that the institutional traders are waiting for their opportunity and looking for some weakness in which they can take advantage and start to sell. And that's
they're not agreeing with you on the AI. They agree with you that AI is overpriced, right? So they're waiting to sell their AI positions.
I think AI is dramatically overpriced. But again, I can tell you that this is why when you're a trader or even an investor, you look at technicals, not fundamentals. The fundamentals have to be good going forward because if you're going to play the statistics, but technicals will tell you what the markets are doing. And right now, there's no reason to step in front of this tape. Yeah, the markets are down a little bit right now. They've had a pretty dramatic turn now. The Nasdaq's down 100, the S&P's down 10, but the Dow's still up 300. Okay. Right. At the end of the day, this is just normal trade. People get too excited when you see a big number, 500 points in the Nasdaq. What is that? It's 2%. If you had a $100 stock, would you panic if the stock moved $2 either way? Of course you wouldn't. You can't look at the numbers. Remember, I started trading, the Dow was 800. Okay. That's when I came to the floor. 800. Now it's 48,000.
Now we're about to hit 50,000. Yeah.
It'll hit 50,000. Listen, the S&P will hit 100,000 or whatever the number is. The Dow will hit 50,000. Gold's going to hit, 10,000 someday, not tomorrow, but I wouldn't be surprised if gold got to 5,000 soon. Okay. Again, look, that's telling you how much problems there really are. Okay.
Yeah.
Gold is acting this crazy. Okay. And running. It's telling you inflation's on the rise. And just remember, the Fed just cut rates 2 weeks ago. The 10-year notes have gone up almost every single day, which means the borrower is getting no break. Okay. The banks are getting the break. They're making the money.
Banks are making a ton of money.
I just one quick story. I drive in my neighborhood in Vegas. Every new housing development is offering deals. They're offering deals on money, okay, because they're in trouble. They're offering negotiations on a new house on pricing. So what does that tell you? It tells you that they're over inventory. It tells you that there's a problem. Now, again, it doesn't mean the problem is going to be tomorrow, but these are warning signs. And if you continue to ignore warning signs, that's when you get left holding the bag.
And how about the big warning sign? WTI oil now 58.74 spot here.
It's going lower. 40s. It's going. Listen, the economy stinks. We have an oversupply. That and copper are two of the big things that you watch. Copper's been going up because I think there's a little bit of short squeeze going on. And the other problem with copper is it's really controlled by China. They own the London Metals Exchange. And in China, you can take your copper to the bank and borrow money off of copper. So they need the loan value to stay higher. This is not the first time we've seen this. You go back 10 years ago, we had the same problem in copper when they ran it up because of the loan value, and then it just fell out of bed. And I think that'll happen again. I can't tell you when, and I'm not going to try to tell you when. Right now, you know me. I'm always long the market. I'm always hedged the market, but I am trying to trade more from the short side. Okay, but that doesn't mean that I'm going to be right. I'm going to trade it, and when I'm wrong, I'm getting out and taking my loss. When I'm right, I'm going to let it run.
And let me talk about that for a second. I made a comment yesterday on a show and today on our show that gold and silver and these metals, and I'll lump them all together, ferrous and non-ferrous. There might not be enough physical metal to cover the paper.
Oh, I've said that for 10 years. There is no chance that there's enough gold, silver, platinum, any of the metals to cover the amount of paper written on it, which is why I advise everybody, if you're a gold believer, a silver believer, whatever you are, you need to buy the physical. You need to control it yourself. You need to touch it, smell it, put it in your safe, put it in a safe deposit box, whatever. There's not enough, and I'm 1,000% agree with you, there's not enough paper in the gold in the world to cover the paper that's written on it.
Is that what's going on now with the prices of gold and silver going up, that the realization of metal is, in the ground and can't even get it up fast enough to cover some of this?
I think that could be part of it, but it also is the central banks are buying it. I think it's also telling you that inflation is coming into play, and I think a lot more people are realizing that. Listen, Costco's now selling, gold bars, $4,000. Okay,
Costco, right?
Yeah, you go to Costco for it, and you use their credit card, you get 4% off. So look, usually that signifies or signals a potential top, right? That's like when the gold stores opened up the last time we had a big run in gold, and of course they all went out of business.
Right.
But again, inflation's on the rise, gold's on the rise. It's just a natural mix, a very good analogy together. They go together. Inflation higher, gold goes higher. And I think the gold is telling you that the inflation isn't coming down, no matter what anybody wants you to believe. It's not coming down anytime soon.
President has asked for pretty much to eliminate interest rates at his rate. And Bostic this morning says that he's going to retire. So the president's going to get another vote. He's going to get a vote when Powell leaves. He's going to pretty much own the Federal Reserve here in about another year and a half. He's going to ask for a lot more cuts, right?
He's wrong, but yes. First of all, the Federal Reserve is a total cartel. Okay, again, let's face it. The Federal Reserve is a total cartel. They don't have the interest of people in heart. They have the interest of the banks because they're owned by the banks. I mean, it's a private corporation. The Federal Reserve is owned by the banks. They cannot manipulate rates like this. The free market tells you that interest rates are much higher even than they're paying right now. Because when the average guy goes to borrow money and he goes to the bank, he's not getting 4%, 5%, 6%, 7%. They're paying 8, 9, 10%. Okay. So again, the problem with the Federal Reserve is they're so far off mandate. And the president's wrong here. I understand why, and I understand the housing deal, but it's the same thing as going to a 50-year mortgage. Okay, you have deals going on that don't make sense. Another warning sign with the interest rate market is you have credit card companies now coming out offering you no payments, no interest for for borrower transfers till 2027. What are they really doing? They're trying to get the consumer even deeper in debt because hell, I can pay it by 2027. Let me go out and buy it right now. Okay. They're trying to stimulate the economy any way they can. And all they're really doing is digging a deeper hole for those who can't afford it and will never be able to afford it.
And that's a great question. How bad is it at the banks? Is it worse than we think?
I think it's worse than I think, but they keep telling you, they keep giving us a stress test. Right. The earnings keep going up. The stocks keep flying. If you ask me, if we did a forensic audit of the banks, I would bet you that they're dramatically over leveraged. Okay.
Leveraged on what?
On loans. I think they get a lot of bad paper out there.
So you're talking about car loans, you're talking about home loans.
Car loans, home loans, all kinds of loans.
Credit cards.
I think that there's going to be more defaults. Okay. Now the other thing is the accounting trick that banks use, they borrow from the Federal Reserve. That's the Fed funds rate. Okay. They take in that loan, they borrow $1 million. Okay. They can turn that liability into an asset and then lend it out at 10-1. But I think they're lending out at more than 10-1. Okay. This is the old story, right? You pretend like you have more. I think some of these banks are leveraged at well over 20-1. Now it's great when the markets are going in your favor and there's a demand, but as soon as the defaults start to come in, this is the same as 2008. Okay. This is the same as the Big Short.
And let's talk about that. I mean, the administration wants a 50-year mortgage.
Okay. Again, that's not going to help anybody because all that's going to do is have people buy farther out. We are a by the month society, right? People, how much is by the month? I don't care how much it costs. How much is my monthly payment?
Right.
So if I can afford my monthly payment, so I get a 50-year mortgage. Look, this is no good. We've eliminated, unfortunately.
Is that 50-year mortgage going to? You think? Okay, I'm not spending this on this mortgage, so I'll put that $100, $200, $500 I'm saving, put that into the stock market, put that into crypto. Is that right?
They could, but they're not going to do that. That's not the way that's not the way our society operates. Okay.
What are they going to do with it?
They're going to spend more. They're going to find other places to spend money.
Gotcha.
They're going to go to more restaurants. They're going to buy more TV sets. We are not a fiscally responsible nation. From the government at the top all the way down to the guys at the bottom, nobody's necessarily fiscally responsible that takes care of things. It's, again, how much is by the month? Let me go get that new car. They're offering me 0% free financing, which is not really 0%. It's really
let's talk about that. For those of you who don't know, Todd lives in Vegas a lot of time of the year. How's Vegas doing?
No good. It's tourism is down. Okay. Listen, they lost their mind here. When the corporations took over, they raised prices so high that the average guy, who can go and go to a restaurant and pay $200 for a steak. I mean, park your car for $50. I mean, this is like New York prices in Las Vegas, which again, the problem here is.
And I would tell you, New York prices have come down. I was just there. I didn't spend nearly as much as I thought I was going to spend. I think New York's coming down, actually.
Yeah, they better come down because listen, people can't live, and that's the bottom line. You cannot keep attacking people and taking their money. Okay, and this is what BlackRock did in the real estate market. Okay, this is another problem that's going to happen. They own a big majority of the real estate. Okay, and rents are high, houses are high. People can't afford to pay their rent. What are we going to do here? How's this all going to blend out? And you know how it always ends. It always ends the same way.
And let's talk about that. I mean, you talk about it from the rent side. I think the rent's so damn high, as the slogan went. The third thing that they were talking about in New York was the rise of Dallas, Texas, where all the exchanges are going. Do you feel like that New York may start to fall apart once all these exchanges go into Dallas, Texas?
New York's New York from that standpoint, and I think it'll always be kind of New York, but I think they're certainly dramatically hurting. I think Florida and Texas have been big benefactors of what's happened in New York, not even before they elected a communist Jew hater. Okay. I think that has been happening for quite a while. When you charge so much state tax, it's hard for people to want to stay there. And if you don't have to be there, and now you've taken out a lot of the traders, when you put the exchanges somewhere else, they can go to another state. I mean, if you can move, they're going to move. I mean, I moved out of Chicago for the very same reason.
That was the first question out of almost all of my, I have a lot of friends on the floor, and they all ask me the same question. Are people moving to Florida? How is housing prices going to go up in Florida? I'm like, maybe, but I don't really see people really moving out of the city. I think the ones who want to move out already moved out, with de Blasio, who most people in New York did not like. Eric Adams, they disliked even worse, I think. So a lot of them go, well, how much worse can Mamdani be? And a lot of them said, well, it could be a lot worse, but we're used to it now, right? So I don't see these states just exploding, Florida and Texas, all of a sudden.
Well, I think a lot of people already made the move, so it's hard to say. But it wouldn't shock me if people. I mean, listen, what do you have in New York if you start taking away a lot of the things? You take away the financial district. If you start taking away more, look, I know a lot of people in New York, they love it. And hey, I know people in Chicago.
I love New York. I'm a big fan of New York City.
So
one of my favorite cities. Vegas too, though.
But to me, when I go to New York, I feel like I'm going to prison. So again, I do. What can I tell you? I don't like Chicago either. I grew up in Chicago. Yeah, I think again, I hate getting ripped off constantly. I can't believe that the state of New York could vote in Mamdani and AOC, two people that have no business in the political world. Okay, but of course, our current system has most people that are in Washington D.C. don't belong there either. So there's another story for another day.
All right, let's get to it. I'll let you go after this one. Dollar strengthening a little bit, almost back to 100. That makes our products more expensive. Is the balancing of the tariffs, trades, dollar, all that fun stuff, shipping channels, Dow theory, throw it all together. What have we got coming up for this this holiday season?
I think it'll probably be a good holiday season because you're getting the credit card company. Everybody's making money more accessible to people that can't afford to borrow. Okay?
Gotcha.
And you know that when you have kids, you don't want kids to suffer for Christmas or Hanukkah. Okay, you're going to buy, you're going to spend, and I think it'll be a good holiday season. They've already started, Black Friday already, right? You got Walmart and everybody else having Black Friday sales. I think it'll be fine. I think the sales will be fine. The real question would be is what are the profit margins going to be? Because I think they're already reducing. So I think the bigger question will be profit, not sales.
Yeah, and I was just in the outlet mall near my home. I had one of the biggest in Florida, and I had to go get new luggage. And all I saw in the window sills was 60, 70, 80% off. Normally when I see the number 7, and 80, that's psychologically people really jump at that. 50% off, they just think it's a sales gimmick. 60% off, that's the little number. But 70, 80 is deep enough where people go, they start to really, go, oh, I want to buy again. Are they just raising prices to give them the 70% off, or is the economy really that bad?
I think both. We all know the gimmick of retail, right? You raise a little higher so you can bring it down. I think it's a combination of both, though. I think a lot of stores are stuck with a lot of goods they can't afford either.
Mm.
I think that they have to move inventory. That's where the closeout business comes from, right? And of course, a lot of the standalone stores or a lot of the retail outlets, a lot of people go to Amazon. A lot of people go online now. I mean, I don't go to a store anymore. I buy everything online. I don't go anywhere. Okay. Yeah. But I think that it's a little bit of both. The usual markup so you can mark it down, but also I think they have to get rid of inventory. I think they have to pay their bills. I think you'll see the farmers are in the same conundrum right now because grain prices are so low. They're at a loss. Okay, but some have to sell because they got to pay their bills. And I think that's the same thing you're seeing in a lot of these retail stores. They got to sell because they got to pay their bills.
They got to pay their bills. All right, straight talk from Bubba himself. Bubba, I'll see you right back here next week, my man.
Thanks so much, Big Beat. Always a pleasure to be with you, brother.